Welcome all to this Property Club webinar. If you're watching this, perhaps you've been unable to attend one of our live events, so we've come to you in the comfort of your own home. Just a quick fact for you there. So did you know that earning $87,000 a year, you're most likely working the first 2 days of the week for the taxman? Bit of a sad fact, that one. So this is myself. I'm a property mentor within the Property Club. And all property mentors are very similar to myself. We've just come from humble backgrounds of being everyday income earners, and we've been able to acquire a property portfolio using the assistance, the guidance of the Property Club over the years. So why is Property Club the leader? Well, as mentioned, I'm a property mentor, as you'll all be aligned your own one as well. We're not salespeople, we're just purely property investors ourselves, and we've learned lots of tips and traps along the way, and we're here to pass on that education to you. So you're all aligned your own property mentor for free with all of your property questions. They're at your beckoning call. We have a Property Millionaires Club, which offers advanced learnings and strategies. So they are for members who have acquired property through the club, and we get together for social atmospheres as well as workshop environments to further enhance our abilities with our portfolios. When acquiring properties, we have a large database, so that means we have extreme bargaining power at being able to get you the best price on properties. And we've been going for a long time. Longevity in a field like this is rare, so that's why what we do is a great product, been around for a long time, lots of happy members, and you've got that comfort with our experience. So why property? Why invest in property? Well, high leverage is a big key, which means we're able to borrow a large amount of the asset to then purchase, as opposed to shares, stocks, whatnot, where the bank are less willing to lend you as much money. With property, they'll generally lend you 80, even up to 90% of the value of that asset, which means it's relatively low risk in the bank's eyes. And historically, we know what property prices have done, offering long-term capital growth. The great thing is as well, you've obviously got the rental income and the tax benefits associated with holding that property, which means your out-of-pocket expense is very low. And with all investing, there is a risk, but property is definitely relatively low risk as opposed to others. So why do we bother even looking at properties? Well, we want to be able to have these choices in life, I guess. So having the nice Aston Martin car, possibly playing golf at the Masters, whatever it might be, spoiling the grandkids. We all want to have the option to make these choices in life, and we obviously need the wealth to be able to do that. So that's why we strongly look at property. Let's just work out some quick numbers then. So we know how long we're all living for, and this number is increasing each year as modern medicines improve. 60,000 is a comfortable lifestyle that we require. You can see there just quickly that that's assuming we own our own house and we're not allowing too much by way of clothing and whatnot. So 60,000 doesn't get you a huge amount, and obviously we're looking at more than that, but for this purpose of the exercise, we're going to use that number there. Anyone can look this up on the ASFA website or others similar to this and select your state and whether you're a single, couple, and if you want a modest or a comfortable lifestyle. So let's look at retiring at 60 and living to 80. That means using that $60,000 fee or amount, we're going to need about 1.2 million. Obviously, if we want to exit the workforce a little earlier, which most of us do, then that number becomes greater. Obviously, again, if we're going to live longer than 80, which we know we are nowadays, that number is going to be even more. And a sad fact, though, is that only 5% of us will be financially secure at the age of 65. Pension, it's an ever-changing goalpost, this one. Will it be around in the next 10, 15 years? Who knows? But currently, the full maximum pension is $35,000 for a couple. So as you can see, nowhere near the $60,000 minimum that we're looking at for a comfortable lifestyle. These industry super funds ads always make me laugh. They're talking about rolling their super into one of these funds 10 years earlier, and their fund balance might be another $20,000 ahead. We now know that $20,000 over the grand scheme of things isn't much. We look at the median super amounts there for people aged between 60 and 65. So combining those together gives you just over 400,000, sorry, and we know after 8 years you'll then be reliant on the pension. So what's the best solution? Well, we believe it is investing in property, residential investment property. We touched on these facts earlier, so high leverage. Historically, there's been long-term capital growth, and obviously the way interest rates are at the moment, along with rental income and your tax benefits, then it's very cheap to hold on to that asset. So what do you think your parents paid for their place today? Or what do you think it's worth today, sorry? So think back to the place maybe you grew up in, even maybe your grandparents. Ask them what they bought their property for and what it might be worth today. And we know that, and we all know that property prices do increase. It's inevitable. So it's a great form of investment. And why is it going to continue to do so? Well, this is quite an interesting graphic, this one. So we know overseas migration is a big part of what's happening in Australia, and you can see why. So Australia is a fantastic place, not only for education, for hospitals, for clean air, all those sorts of things. So you can see why Australia is the obvious choice for the people living in those areas. Here's a chart showing that historically, property prices do increase. It's not a straight line. There's dips and flows, but over the long term, prices in each and every different state have increased. You can see this graph here finishes in 2013 with Sydney's median price point there at $775. We now know, fast forward to 2018, that figure's above $1 million. So it's just time in the market that is the key. A quick exercise here to show you the power of leverage. So let's assume you have $45,000 in savings and you've put it in a term deposit. By the time you pay, you receive your 1.5% interest or whatever it might be and pay your tax on the income, it's not really doing anything for you. You've got a car or boat, which is what we call a depreciating asset. A car can be a necessity, but we can see over the life of holding onto that asset that it's not achieving any money for us. So not a good investment. Super will increase over time, providing you are still working and your employees contributing into your super. Maybe you're making concessional payments as well, but super will increase, but that is providing that you are contributing, and we know the goalposts with super when you can access and rules around that constantly changing as well. So let's now consider property. So let's take that $45,000 and invest in a property worth $450,000 using other people's money. So that 90% lend we spoke about, we can then get into an asset worth $450,000. Now for this exercise, we're working on a doubling per 10 years. Historically, 7 to 10 years was a rule of thumb. Nowadays, since the GFC, lower inflation, lower interest rates, all these other factors, that number can now be a fair bit higher. So it might be 15 years or more. But for the purpose of this exercise, let's just use 10. But even if it is 20 years, it's still very beneficial. So that property has now doubled to be worth $900,000. Our debt level has remained constant. So that means we've now created just under $500,000 worth of equity. Fast forward to another doubling cycle and that property is now worth 1.8. Our debt level has remained the same at $405,000, meaning a gain of 1.4 in equity. That's with one property. So we talk about accumulating a large portfolio, so we can imagine what 3, 4, 5 properties will look like doing that. As I've highlighted, it's time in the market, which is key. So I'll highlight that down the bottom right hand corner there. So if you've held the property for 15 years or longer, 95% of the time is at least doubled in value. Now this is taking into account all property sales across Australia. So yes, your properties in capital cities, but also your mining towns where they haven't been too successful and different places like that. But in general, 15 years or more, you've doubled your money. So key is to buy for growth, diversify. So not only is this location throughout Australia, but also property type, what lender you use, So with any investment, it's important to spread your risk. Here is a very quick snapshot at the game plan with Property Club. So you can see the blue there remains constant, so that's your debt level. So we're not actually paying any of the principal component off. And over time, those red columns are your capital growth. So I do know that lending environments are changing, and potentially paying principal and interest is something you will have to do, but that way you're just creating more equity as well. So why Property Club? We touched on this briefly, but as I mentioned, we're all property investors, and you're all aligned, one of your own property mentors, so you're learning from the best, and it's at no cost to you. We're not salespeople, so there's no pushy sales. We don't have to try and get the best deal for our seller. We're working for you. Power of numbers there, and our longevity. There's a number of member benefits with the Property Club. I'm just going to touch on two very quickly, one being our research department. So we've got Property Researchers Australia-wide, who their sole purpose is searching for the best residential investment property around Australia for our members. There's strict criteria they need to stick to. Obviously, we want you to be very confident and keep coming back as members of ours, so it's important we pick the right properties for you. So we need to know basics like where is the population movement, what local infrastructure is in place, and what money is being spent from a local, state and federal levels into those areas, which are going to then increase employment and all these important factors as well. You need to be connected with transport, and healthcare is now our largest and will be our largest employment base within Australia. So all these factors go along to making sure you can secure a tenant and high-paying tenants, which are going to then in turn into capital growth. One more benefit is our leasing department. So instead of relying on your one property manager to secure a tenant and then ongoing, so if you have a tenant who vacates, instead of just having one, we put it out to tender to, say, 4 or 5 agents who we know are very good in that particular area. They're all then competing for your business. So what that means at the end of the day is we have much lower than industry standard vacancy rates for your property, which means less money out of your pocket, and it means your property manager doesn't become complacent. At the end of the day, they're working for you, so it's important that they're putting the hard work in and securing your tenant. So there's a method to all this madness, and we talk about the 7 steps within Property Club. So learn is crucial and something you'll always be doing throughout your journey. Borrowing capacity is crucial. So to know what you can do or what steps you need to put in place to be able to continue your journey, you really need to know what you can do in a borrowing capacity. So at this end of this workshop, attached is a finance form. I strongly suggest you complete one of these, return it to your property mentor or your independent broker to review, and they will not only tell you what sort of figures you can look at purchasing a property for, but also ways to help maybe consolidate some existing debt, maybe save you some money on your current investment rates on some other properties, whatever it might be. But I strongly suggest you do this every 6 months. It's just a conversation starter with one of our independent brokers, but it's crucial to know what you can do moving forward and how to best put in a strategy and a long-term plan. So it is about acquiring more than just one. We need to work backwards basically, so work out how long until you want to start having these lifestyle choices we spoke about before, and then establish what kind of size property portfolio you need to be able to do this. Before you purchase any sort of property, it is very important you know the cash flow situation. So if you were to go to your local real estate agent, they're not going to advise you of all the hidden maintenance costs, what the depreciation on the property might be, body corporate fees, all these kind of hidden costs. So it's very important that you know exactly what that property is going to cost you, even in a worst case scenario, before you settle on that property, so you can feel comfortable with your decision. And it's about accumulating multiple properties, so not just one property, but multiple properties, and then holding onto those properties for some time to let the value increase. And then at the end of it, you've got to enjoy it. So there's no point going through all of this work here if you're not going to enjoy and have those enjoy those things in life that we spoke about earlier on in the webinar. So as I said, before you go, or once you get off this webinar, as part of the email you would have received the financial wealth check form. Please complete this, send it back to your mentor or broker, whose details you can get from your property mentor, and it will just be a conversation starter, but help you establish what you can do moving forward and some steps you can put in place to be able to achieve what you want. So there's what the form will look like. Download it now, complete it, send it off, and start enjoying your time with Property Club and investing in residential investment property, and hopefully not working till you're in your 70s. Thanks very much for your time. If you've got any, if you need any details, please email us on inquiries@propertyclub.com.au if you need to find out who your property mentor is, or if you've got any other questions. Otherwise, please complete that form, send it back to your mentor, and we look forward to helping you in the future. Thanks for tuning in.